Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. DRSTOXX.com. We have been in business every market day since October of 2002, and this is coming to you from the live trading room. If you want to join me, bunch of great traders, great people from all across the spectrum of trading experiences, from newbies to professionals and everybody in between. Go to the subscribe menu, scroll down to the live trading room, and you can add on our brand new live options room at a 40% discount. All right, enough about that. So let's go over to the market. I'm going to make this short and sweet today because the market's in a pretty good place after testing some of the lows, flushing out weak hands, triggering the stops, and all the things that the market makers like to do. And we're right back up to the highs of the day, and we're very, very close now to new all-time highs for the S&P, for the NASDAQ. The Russell 2000 is a little weaker today. It's lagging on some fears around recession, inflation, and a lack of a Fed cut, which the market is really hoping we get. And we probably will get by the time we get out to the summer. We have a new Fed chair in place. But until then, we may get one from Grinchy Jerome Powell, and maybe not. We just have to see. So anyway, I don't want to talk about him. I don't want to talk about the macro conditions of the market. We are down now to the last couple of weeks, really the last week and a half of trading for the year 2025. We are, let me think now, today's the 23rd. The Santa rally period starts on the 26th. So that we are 3 days out, or 1.5 trading days out from the beginning of the traditional season for all kinds of things bullish. And that usually carries on over to 2 days past the New Year's Day holiday. So that would be the 3rd of January. By the time we get out to the 4th, 5th or so, it would probably be at that point some time to start to lighten up a little bit, get some cash on board. And I don't think we're going to have anything like a major sell-off. I was talking a little bit ago, maybe a couple of weeks ago, about the possibility of a 5 to 10% correction. That is still possible. Of course, the market can do whatever it wants, but I'm not really seeing a catalyst for that just yet. I thought we were going to get some more recessionary data, but instead we got a big GDP print this morning, well above expectations. And while the job market has been a little bit on the weaker side, and the last time we got the numbers, it was horrible, but there are some ways of explaining that, and it's probably just a blip, right, in the overall picture, which is not that bad. And the consumer sentiment is still pretty good. Durable goods orders, if you dig down into the details, were not too bad this morning. So there are some pockets of the market that are a little bit squirrely, but mostly, including some tech sectors like software, solar, cybersecurity, that are in pretty good shape. So all that's to say that I do think the market's going to cool off. We'll probably hit all-time highs sometime between now and the 3rd of January. Then we get a little bit of a pullback. We get some consolidation. We get some choppy trading, and maybe that lasts for a month, maybe 2 months. We go into a trading range, right? So we go down a couple of percent, we jump up a couple of percent, down a couple of percent, and we can trade that. We trade that all the time, but it's not the easiest kind of market to win in, but there are ways of doing that. And there are always niches in the market where the flows are very constant, and like gold and silver, right? That we've been trading gold and silver in the miners for several weeks now because that's been the best sector of the market, and we've stayed out of some of the big blue chip tech stocks like Nvidia. We just bought some AMD a little bit ago, and Google. We're long Google. We're long Microsoft, and anyway, so we're still we're buying back into some of the blue chip techs, but that hasn't been the best space. So we're going to use those guys as they play catch up. But I think going forward after that, into January, February, maybe March, we're going to have to look at some other sectors. Okay, so here's a SPY, and I was just saying in the other room that it is just about as bullish as you can get. You've got your left shoulder right here, your deep cut head, rounded bottom right shoulder. That is a continuation head and shoulders pattern. And when the neckline is either flat or sloping in a bullish direction, which is to say up, it's not quite as sharp as the LRC itself, but it is nicely up. That's as bullish of a pattern, a chart pattern as you can get. Now, it hasn't broken out yet. It'll probably take a couple of days, right? Maybe Monday next week we get that breakout. Volume balance has been a little bit mixed, right? Here's some heavy distribution on the way down. Here's a little bit of lighter accumulation on the way up. You kind of want to see that reversed, but it is a light volume week altogether. It is a holiday shortened week. Tomorrow, you're going to see very little trading, very little volume, very little price movement. It's really not a good day for trading anyway. And this reminds me, let me tell you my schedule. So we're doing a full day today. We did a full day yesterday. Tomorrow, I'm just going to do a quick check-in in the morning. I'll adjust any stops that we might need to adjust. I'll watch the open for about 20, 30 minutes, and then I'm out for the Christmas. And we don't want to be in trading anyway tomorrow because it's not going to be a good market. It never is. But it should be modestly bullish, and we should see any dip that happens get bought back. So no worries about tomorrow. Friday, again, Santa Rally starts, should be bullish. The next week should be modestly bullish. You know, it's not going to be straight up, but it's going to be modestly bullish. And we actually have found some really nice looking sectors of the market that are getting a lot of inflow, a lot of call volume, and good price movement. So we're doing well. In fact, we've been hitting all-time highs just about every day for 4 or 5 days, trading days in a row. All right, so that's the S&P 500. You're going to see something similar with the QQQ. Now, this was the map that I put on the QQQ back on the early December, 5th of December, and I was right on in that first little move, a little bit of a pop, and I was right on with the second move, which was a pullback, but it just went a lot further than I thought, and I was a little late to that third leg, which is a little bit of a pop again. We got that. It just was a couple of days after my top, and I really did think that we were going to get another pullback heading into the 26th of December, heading into Friday. I don't think we're going to get that, friends. So I was overly pessimistic with that little map. But, you know, you go back to December 5th, and it was starting to kind of top out here. It was a rounded top. There was some distribution going on, and there was some concern, and that's what caused the big drop. I don't even remember now what it was all about, but it was something that really kind of shook the market a little bit. So back in that, when that was starting to get flagged, right? You could see it in the call flow, you could see it in the prints of the fund buying and selling, and you could see some of the major names starting to come in when the rest of the market wasn't. That was the clue that, yeah, we're going to get something like an ABC wave pullback, and we got the A wave. We've got the B bounce. We haven't seen a C wave yet. And I don't think we're going to get one, in fact, until maybe we get past the first few days of January. So my map, I'm going to take this one off now because it's no longer, in my opinion, at least no longer viable. And I think a more reliable map, one that will likely play out, is something like this, right? Soft, upside, new all-time highs. I don't know if we're going to get a new all-time high for the NASDAQ. I did say 630 as a potential top. I think that's probably, realistic, not necessarily optimistic. Optimistic would be more like 635, 634, 635. A 630 is a top. That wouldn't be an all-time high, but it would be quite close. And then I think from there, we will probably see some less robust price action. Some pullbacks might feel a little scary, and our strategy at that point, if it plays out, and it may not, but if it does play out, our strategy will be we will look for the weak sectors. We'll put on some hedges. We will trade long the sectors that are getting good inflows and are looking at really good price action, and anything that is in between those two will take very small size in. Right? That's just trading 101. Now, the small cap index, we actually are long the small cap index. We went long yesterday, or was it the day before? I think it was yesterday, using the micro E-minis. And this was a lagging sector for a long time, and then it was an outperforming sector for a long time. And now it did a little bit of a pullback, hit the 21 period moving average, which is good. The rest of the market pulled back during the same period as well. And now it's producing a nice looking, what I call a mini pullback. Right? So a mini pullback is where you only get down to maybe the 21 period moving average, maybe the midline of the LRC, maybe even something like the 13 period moving average, which is even a quicker one still. It's a little mini pullback, 4 or 5 bars maybe at the most, and it's just enough to shake out some of the late longs. Let's just get them out of the picture, right? They bought up here, they're underwater down here, and they just abandoned ship, right? We don't want them on board anyway. What we do want on board are the folks that bought down here. They've got a nice profit, and now they're going to add to their positions here, and that can include some funds. And typically, when you get a strong uptrend and a mini pullback, not all the way to the 50, not all the way to the pink zone, not a 5% or more pullback, but just a little mini pullback, you get a little mini bounce. So you have to, if the pullback is shallow, your expectation for the upside also has to be not that big, right? So right up here about 258, 259, maybe 260 if it breaks out there, then we can look at taking some profits on our position. I would stay out of bonds. Gold, I think, is going to be really good, very good space to be in. Obviously, it's been excellent. Look at this, all-time highs here. Sharp pullback on, I don't know, what was that, tariffs or something? Anyway, a hawkish Fed, inflation, a strong dollar. I don't know what was going on here, but it really pulled back sharply. And then it just is doing this beautiful, we call this a scallop, right? These beautiful little scallop moves up, 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 up. And it's in one of those moves now. Now, I think the next move from here, I wouldn't buy gold today. I still have some gold. I've been in it, from down here in this area. I had some silver all the way until this morning. I sold that out. We closed out our miners. We took our profits on both GDX calls and the NUGT shares that we had in both the two rooms. And I did the same in my own personal account. And but here's the thing. I think that we're going to get just another modest little scallop. And when it's down here in, the rounded bottom of those lows is where we want to get back on board gold again. And I think we could probably hold gold for 3 months. And something like a shiny or a UGL or calls on GLD, you're going to see 30, 40, 50% return by the time we get out to April. I could be totally wrong, but the macro environment for gold, it's a perfect storm of convergences. Bitcoin is not doing very well. The dollar is still weak. The Fed is not as dovish as the market wants it to be, but it will be once we get a new chairman, and the market's going to start to price that in. So yeah, there's just every reason to own gold and no reason to not own gold. All right, and I would say that pretty much the same for silver. Silver has been held back a long time. It was really underperforming among the metals, and now it's just exploding, just crazy explosion. I sold my AGQ a little too soon, but anyway, it is. I'll get back in on a pullback if we get one. But this is just this is called not price exploration, but revaluation. Right, the value of silver has been held down by a variety of factors, and I'm not an economist. I can't tell you what they are, but now those factors have been lessened, and silver is starting to push back higher toward where its actual valuation is. And I don't think it's done yet. Again, with silver, buy it on a dip, and then hold it another 3 or 4 months, and you're going to have 30, 40% return. So we went long natural gas. This is not a good, let me look at the UNG because I don't know what happened to the futures contract there. There it is. So we went long natural gas this morning. We actually did a little bit in both rooms. It's because the setup was so nice. One is an official trade in calls. The other's an unofficial trade in shares. And here's the reversal pivot printed yesterday. Here is today's bar. It was a gap up and a big go. Lots of volume came in yesterday off of that hammer candle low, and you can see it's right at a key support shelf. I mean, this is just, it doesn't get much easier than this for calling a bottom, right? Calling a bottom is not always easy, but when you have a sequence of lower lows, you don't really want to look for a bottom. But when you have a sequence of equal lows, or even better, a sequence of higher lows, yeah, you can say, yeah, we're at the bottom now. So that's what we had yesterday. The volume was a big tip off. All the indicators that I like to use are all in the right place. And And so, boom, I started nibbling yesterday on Boyle, got made it an unofficial trade in the live trading room Boyle, and we're in UNG calls over in the options room. And yeah, it doesn't get any better than that. Okay, so last thing I want to do, and then I'm going to talk a little bit about this indicator down here at the bottom real quickly. And then I've got some requests for charts. So I will look at those. And if we don't have too many in the room today, because obviously everybody's kind of off getting ready for Christmas. My wife is out getting ready for Christmas. She's doing it for me. And uh, yeah, so if you are in the room and you can hear me and you have a ticker symbol in mind that you'd like me to take a good look at, go ahead and type those tickers in now. I see a few. So we'll get over that in just a minute. Let's look at worst to best. So Tesla, we've been in some Tesla calls for a little while in the live options room, and we kind of got in right around in this space here, and went up and then down, up and then down. They haven't really performed very well just yet, but I suspect the Tesla still has an upside move, but I don't have too much hope that it's going to get too much higher. We had a very close test of 500 yesterday. It got up to 498.83. I still think we get a 500 test before this particular move is done, and it should come between now and the first week of January. And then that will give us a chance to get out of our calls and get into something else. But I wouldn't go long Tesla here. PLTR looks pretty good to me, and it was nice. I really thought it was going to break this uptrending line and print a a lower high, which it did, and then it morphed into, and that big red bar right there, that looked like a killer, right? It was below the 21, it was below the 50, lots of volume coming in, lots of put flow showing up for PLTR, and then it was right back up again. It was a trap. It turned out to be a trap, and we actually got sucked into that trap. We took a small loss on our PLTR puts, but because we had a tight stop and it just got stopped out. But anyway, now it's looking bullish, but I would have to say that there are better setups out there among the mags. Okay, so this one is one of the better ones. This is AMD. We have a threefold test of support, just like we did with natural gas, and you'd see some bullish divergence underneath this one. That was a scary big red bar, broke support, confirmed the next day, kind of, although it was a bullish inside day bar, but it was below the line, and then it was just boom, right? Back up from there. So AMD, in terms of the fundamentals, in terms of the valuations, in terms of its forward growth prospects, is a must-own stock, in my opinion. And anytime you get a good dip like this, especially to gap support, which is what this is, that's a power gap, right? Power gap up. It wasn't on earnings. It was on some news of government investment, I think. And it hasn't been able to get back into that gap. Yeah, for a day or two, and then it's right back up again. So we caught it early. We've got a nice move going on it already. And I do think it's probably going to lounge around the 21 here for a little bit. But once we get from Friday into next week, we should start to see a good trend higher, maybe up into the 50, 230 would be our target there. Apple looks very good. It's a soft ABC pullback to the rising 50. It had a big flush out day on that hammer candle. It had a huge volume in print, which is to say the funds were buying that day. And then it hasn't done a whole lot since then, but we're long. I think we're long shares of AAPU, and the little greeny reversal bar at the 50 is probably the precursor to a nice looking bounce that should start, probably not tomorrow. It should start on Friday. Qualcomm is not too bad, right? You had the breakout and then a pullback, soft pullback into the rising 21 period moving average. You could buy Qualcomm right here. It should have a green flag. Microsoft is looking a little better these days, but it's still kind of loungy. You have a double bottom going on here with a 3-day stall at the 21 period moving average. That's not the kind of robust price action that you want to see. So if you're looking for where's the money flowing? What are the hot stocks? What are the funds buying? It's not going to be Microsoft, I'm afraid to say. Yeah, it's, because of valuation, because it's the second or third biggest company on the planet. Yeah, it's probably going to bounce back, but it's not going to do it in any sort of real exciting way without any new news. What else? Google looks very good. This is probably my favorite setup, and we are long Google in we're long Google calls in the options room. Right, up, 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 higher lows, higher highs, beautiful trending action all the way up, and then you have this nice soft pullback, which is kind of coinciding a little bit with the rest of the market, but it's a very shallow pullback, and this one goes all the way down over 3 or 4 weeks down to the pink zone. There's that big scary red candle which we had on the Nasdaq, and then we've had 4 up days since then, getting back on track and getting our calls back up above into profits. Yeah, so NVIDIA is having a very nice day today. It's up above the 50. It cleared the 21 a couple of days ago, cleared the 50 today, along with a big important SR flip. That's a yellow box right there. And NVIDIA looks very good, I would have to say it. But we're already long SOXL in one of the rooms. And I'm forgetting, we kind of have we have the semiconductors covered in both rooms, and I'm forgetting exactly how we do that. So we don't really need to add on NVIDIA, but you could. This is a buy signal. It's a little bit of a big green stick. So my rule is, unless it's at the bottom of a downtrend, when you get a big green stick like this, which is well above the average range for the day, then you're more likely to get a better entry price by waiting a day or 2 or 3. So if you buy a big green stick, yeah, sometimes they keep going, but most often it stalls around, and you can kind of sit in a drawdown for a few days. So I wouldn't buy it today, but put it on your watch list for tomorrow or the next day, or Friday. Avgo looks pretty good, but I don't like that big gap down. That's a scary gap on earnings. So to me, it's just kind of in the no-go zone for now. And this looks like a bit of a bear flag, possibly. And it won't manifest itself for a while. It did have a big green fund buying a couple of days ago. Not a whole lot of follow through since then, however. And Amazon, this actually looks better. It kind of looks like NVIDIA, right? And you've got the trend line breaking today, so that's good. Breaking out to the upside. Usually when it is a pullback like this, you have to wait until you break the most recent pivot high to really see, okay, now the downtrend, the pullback is done. We're not quite there yet, but we do have the higher low, and we're on our way to testing, 236. So I like Amazon, I like Google, Apple, and Qualcomm, and AMD. I would put those 5 on the list. All right, that's all I wanted to say. One last thing I want to show you is this indicator down here. Now, these are cycles. We've got the black one is the long-term cycle. We've got the blue one is a short-term cycle. And then we have 2 cycles that are more intermediate. And the theory that, and this comes from, what's his name? Jim Simons, who is, he's not the developer of cycle theory, but he used cycles to develop the algorithm for his mathematical-based pattern recognition, just looking at price. He only looked at price and volume, and he only looked at math. And, when he was trading his big hedge fund, he didn't hire Harvard MBAs, and he didn't hire stock traders. He hired MIT mathematic PhDs, mostly from other places too, because he wanted to focus on 100% objective mathematical approach to the market, and he turned out to be the greatest hedge fund manager of all time. His fund had one of the highest percentages of performance fees and management fees, and despite all of that, after the fees are paid, you were making 25-30% a year with his fund for 30 years, all because of math, right? All because of math. They were always honing and revising and stuff, but he was very successful. So if he's using math, I want to use a math-based indicator myself. Of course, all of them are math-based in some way, but this one is pure math. And these are dynamic cycles, so they do respond a bit to what's going on in the price. But for the most part, you have these waves that oscillate at set distances between the peaks and the troughs. And the difference in the difference that price makes is that the amplitude of the waves can vary. So sometimes they're very tight, which means that you've got not a very trending market. Sometimes they're really tall, which means you've got large movements both up and down, right? Now, here's the thing I've been trying to figure out. I've got these 4 different cycles, 4 different time periods. Can we just trade one of them? Like, do we just buy the black one here when it's down at the bottom and sell it when it's up at the top? Well, yes and no. The black one is the most important. The blue one is the least important. But I have discovered that when the black line, the big cycle, is down at a low, and uh, you've got 3 other cycles, right? If 2 out of the 3 are rising when it's down at the low, that usually pinpoints a very, very good long entry. And then when it's up at the top, right? And even if the other cycles are down at the bottom and starting to curl higher, and even if the price of the stock is at a place of support, if the cycle, the black cycle, is up the top, and if it's, especially if it's starting to fall, any bounce from there tends to be short-lived. So if we use this, I'm still working on it, but let me see if I can find a couple of examples here. So like here's a top, right? Let's see what's going on in the market here. Here's the top of the black line. So let's follow it down. Now it's starting to bottom out right about here. And we've got the blue line is rising, the yellow line is rising, the green line is rising right at that point. So if we go up here, this is the entry right there. And look what it did, right? Boom, 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 all the way to the top. And when it got to the top, guess where the black line was? Also at the top. Now that's not the best entry, right? Because it is kind of in the middle of the trend. Let's see what's going on down here. This is where you really wanted to get inside. Well, that was a little too early. Here's the top. Here's the bottom. Now the green line is up, but the yellow is peaking out, so that's not quite ready yet. Now the green line is rising and the blue is starting to rise. What's going on here? Yeah, right about in there. And then just a few days later, it's way up. Yeah. So anyway, I'm just playing around with this. Just wanted to show that to you. We're always looking for, there's no holy grail in the market, but when you put a convergence of probabilities together from stochastics and MACD and price and volume and cycles and general sentiment of the market and macro analysis and sector analysis, and you watch the call flow to see where the options are going, and you put all of those things together, and you're going to see that certain names are going to rise to the top, and those are the ones that you want to focus on. Okay, enough about all of that. Let's jump over and okay, so I see a number. Let's start with the first one that I see is Carvana, a stock I used to hate. Well, I didn't know I did not understand the business model, and this was back when it was kind of an IPO and a big deal, and yeah, it wasn't a great stock for a long time, and then suddenly just like it's been one of the most successful stocks year to date. Here's the April low, and it was down there at like 150, and then it peaked out here at 475. That's what is it, 200% or 300%? Yeah, 200% plus return in just a few months. And that's phenomenal. So one of the best stocks in the S&P, and it was added to the S&P just a little bit ago. And so we can't, we can't just dismiss it, right? Even if we don't like what they do or think it's cheesy, it's still doing something good. Okay, so let's see what's going on the chart. Well, before we look at the indicators, let's just look at the price. We've got a good, healthy volume balance going on right here until that big. There's a distribution day right there at the top. Here's a big distribution day, which signals funds are getting out. They're selling. This gap up, I don't know, that was on news, I guess. Was that the S&P 500 ad? I don't know. But that's a nice looking gap up. We've come down. Gaps usually act as support, right? And if they do act as support, they tend to never fill. So that's a good sign that it tagged the same low and is reversing today. Little tiny inside day bar. Light volume, but that doesn't matter on a day like today. Close to the 21, we've got stacked MAs, 21 over the 50, 50 over the 200. We've got a nice soft uptrend for the LRC. Everything looks good in terms of price. The only thing I don't like is that volume that's going on there. This is distribution. So it doesn't mean that distribution means it's going to go straight down, but it does mean that if it starts to get back up into the area where there was that selling going on, which looks to me to be right around 450. If it gets back up to 450, it's probably going to be a ceiling. It's probably going to stall and then it'll roll over, and then we probably will get a lower low. So it's not a short. I wouldn't short a stock like this, but it's not really a buy either. I think your upside is limited. But and then we confirm that with a MACD's bearish crossover. That's not so good. The smooth stochastics are looking good. They're not oversold yet, but they're almost there, and they're near the bottom, which is getting to oversold. The cycles aren't where we would want them, however, right? The big black cycle is falling from a top. The same with the green. The blue is falling. They're all falling. So this is what I would do. If I really need to go long, I would wait for a little further downside, which you're probably going to get in the next 2 or 3 weeks. Maybe fill in the gap, gets down to 400, test that level, let the cycles start to cool off, hit the bottom, and that black cycle especially, when that starts to hit bottom, and you've got 2 out of the 3 other cycles starting to rise, that's when I would jump on board. Okay, so that's Carvana. Let's take a look at CRDO. This was on my watch list for a long time, and I just added it back to charts of interest, my list, charts of interest, because it was mentioned by several of the folks in my pro trading group as a good stock for 2026. So I'm kind of, it's that time of year. We want to start thinking about stocks that become focus stocks for us. 2025, it was Iran, Oklo, NBIS, CoreWave for a while until it started getting really bad. Circle for a while, same reason. But we had a list of core stocks that we liked the story, we liked the growth, we liked the charts, and they were hot for a lot of 2025. Now they're really starting to, they've just had these big drawbacks, big pull downs, and we need to find a new set. CRDO may be one of those. Okay, so what's going on in this chart? Well, we've got that trend line here, which broke, but then it got back up above it. So that's not a valid trend line, right? So we pull this down to include the lows, the pivot lows, and as many of previous pivot lows as possible. And that to me, and we probably can get even more, that to me is your supporting trend line. Now, just as a general rule, when you're looking at a stock and you're thinking about buying an uptrending stock like this one, you want to get as close to that support low as possible because that reduces your risk. You put your stop just underneath that black line, right? So 133, you buy it here at 148. That's not too far away, not too far away. And where is your target price? Well, it's up here, right? So you take, this is the old tip. Supporting line is in, and then you take your resistance line and try to make it as parallel as possible. And then you stick that over as many tops as possible, right about there. And that becomes your target. So is it just going to go straight up? Of course not. It's going to go, sideways, consolidation, couple of days down, 3 days up, that sort of thing. But I like this. This is a bullish setup. Okay, the volume balance coming down, not so good. So there's one little red flag, but the volume balance going up, at least on a few days, looks pretty good. I do see one distribution day, which is way up here, and that was a blow off top, right? Capitulation top. Everybody's getting out, and that's why it got so exaggerated. We have a couple of other heavy volume selling days on the way down. But I'm looking also at some big accumulation days on the way up. So a couple of days ago, big volume day. Couple of late November. Same before that. So volume is a little bit on the mixed picture, maybe leaning slightly bearish, which just means to me that it's not going to go straight up. It's still going to have some trouble getting up through resistance and supply, but it probably will. And the MACD is doing exactly what you want. It's below the zero line, which means oversold, and it's starting to pinch. Those two things together give you a buy signal. It's even better when they cross over each other, of course. Stochastics is perfect. So we hit below the 20 oversold line with the green. That's your signal. And it's just about right there, just touching each other like a crab, ready to give us a fresh buy signal. The cycles look pretty good too. The black is down low. It's starting to flatten out. We've got 2 of the other cycles rising higher. So yeah, this is a bullish setup. In fact, I like that so much. I'm going to put that on my greens list. And I haven't updated this today, so don't, if you're looking at those ticker symbols there, some of them may not be very good today. Let's see. XBI. All right, so XBI, LABU. LABU's been a great trade. We were long LABU for a while, and then it got a little bit squirrely up in here. We took our profits. It has come down a little bit, tested the 21. Two big up days in a row, big heavy volume, bullish, bullish, bullish. I guess it's probably new 52-week highs. But for me, because LABU itself is it's a little bit I wouldn't say it's overbought, but it's just this is a long uptrend, and it's come a long way off the lows. And when you drill down into the top stocks in XBI or XLV, which is a broader set of healthcare stocks, you're going to see some really good setups. I think Lilly is very good. J&J is very good. Merck has been very good. I don't know about UNH just yet, but there are some others in the healthcare management space that are good. So, and there are some good biotechs out there, just that there are a lot of squirrely ones too. And NTRA is one that I like. This is a biotech stock, and look at this nice pullback, right? So compare LABU, which is up near all-time highs, XBI near all-time highs, and this one has already had a nice little pullback, rounded bottom, big upside day on heavy volume, and it's just kind of cooling off today, but this looks good, right? This is the kind of thing that you want. We are also long IONS, which is a very good looking, very strong, healthy stock, and we're just waiting for this guy to bust out, and it should. So this is my, don't trade XBI, don't trade LABU. Scroll down into some of the top names in those sectors, in those funds, and find one that looks good, or two that look good. RDT, okay, this is another service company stock that I have hated. And then right in here, it did this amazing big up on earnings. I mean, how do they even make, does anybody go to that website anymore? The only time I ever see Reddit is when I'm doing like some research and I type in something into the Google search bar, and one of the things that comes up usually is a discussion on Reddit about what it is I'm interested in. That's the only time I ever see. I never, I don't know. I'm just out of it, I guess. But anyway, that's beside the point. Somehow they've managed to make some money, and the market looks at it as a fun Momo meme type stock to trade. But if you're going to do that, I have no trouble with doing that. We do that all the time, but you need to find a good setup. This is not a good setup, right? This is a double top. There's probably some bearish divergence. In fact, I can see it already in the MACD. It's certainly there in stochastics. And this usually plays out to the downside for a little while. Now, it doesn't mean it can't just flip right back up and go higher, but this would be, and I wouldn't short it necessarily because it's not the right time of year to be putting on a bunch of shorts. But I would just stay out. If I had profits, I would take my profits and look for something better. But it looks to me like it's not going to get above 240 anytime real soon. Maybe it needs to come down and test the 50. Right? That would be a reasonable pullback. And then it builds a little base, and then it starts to rise higher, and then you're looking for the 280 test, but not here. Okay. Let me do a couple more here. TER, and then I need to get back into the room. All right. Well, obviously, this is a very strong chart, very strong uptrend. The MAs are stacked, big volume print there. Volume balance actually going back 2 or 3 weeks looks good. Nice big breakout and pullback, pretty soft pullback on reasonable volume to the 21 and route back up again. Yeah, this looks good. This is a buy. It's not the perfect setup in the sense that it's already bounced up 2 or 3 days, but it's a very good setup, very strong, and I think you're probably going to get, where would this go, right? If we kind of extend this out and push it over into early January, which is, I think, when things are going to start to roll over a little bit, then you're looking at something like 216, 217. Let's just call it 215, right? Make it a nice round number. So from 198 to 215, that's not the biggest trade, right? 7-8%, but you can leverage that with some calls. And if you're already long, yeah, pat yourself on the back. That's a nice looking trend, nice up chart. Of course, Teradyne is a great company. It's in the XLK and SMH and all kinds of good stuff. Okay, let me look at one more here. One more, and then I need to go. I know there are a bunch others. Sofi, I'm actually a little bit interested in myself. So let's see how it's. Yeah, not too bad. Not too bad. This one was getting some pretty good call flow last week. And yeah, this is a tight little consolidation. There's a gap right there, which could act as resistance. The 50 is just above where we are. It could hit the resistance trend line, roll over, test the supporting trend line before it's ready to break out. And Sofi is kind of one of those strange stocks. So it used to be the thing, the big guy, right? I mean, it was the one with the football stadium and all the credit cards and consumer loans and online banking and trading, investing, all kinds of stuff. Now there's competition, right? And you've got Dave, you've got Ally, you've got Affirm, you've got others that are kind of in that same space. PayPal has been there forever, and now that there's been more competition and some of these new names, Dave is one I really like that have better services, better growth, and their new members coming in, they're hitting really good numbers. That's less true for Ally. Affirm has been a little bit squirrely, but Dave looks really good. PayPal is making a big comeback, and Sofi is going to struggle because of the competition. But other than that, it in and of itself, it's a good-looking chart, and it's got some good numbers still. So just be aware that it may not give you the kind of return that you were used to getting back here, or some of the other big pops. Oops, I just ruined my chart. And over here, there was a beautiful run right here. So I mentioned Sofi in one of my IBD live appearances, and it was down here making this nice rounded bottom. It was early October, the price of about $9, and just a few weeks later, it's up here at 16. So that kind of move you're not going to see. But yeah, if you want to diversify, I would buy a little bit of PayPal and a little bit of Dave, along with Sofi. Okay, anyway, that's all I need to say, guys. I'm going to let you go. Sorry I couldn't get to some of the others. I will see if I can post some charts in the room. God bless everybody. Hey, I will be in the room tomorrow morning briefly to give it an update, and then I'm done for Christmas. So everybody have a great Christmas, blessed Christmas, and we'll be back on board on Friday the 26th to trade the whole market. All right, bye for now. See you later.